Hello, everyone. It's been a while since I've added a video to my tax help video series. However, in lieu of the recent changes made stemming from the Tax Cuts and Job Act, TCJA, also known as the new tax reform, I felt that it was time to record a few more videos and shed a little light on the changes. Now, in this particular video, I'm going to discuss the tax brackets, standard deductions, and the personal exemption amounts. Now, I'm going to provide you with the percentage of the tax rate, but I'm not going to provide you with the income limits relating to different tax rates. You can easily find that information using various other sources if needed. So I'm going to briefly cover 2017 and 2018. And again, I'm going to discuss the tax brackets, the standard deduction amounts, and the personal exemption amount. So 2017, which is tax return that will be due April of this year. Tax brackets are 10%, 15%, 25%, 28%, 33%, 35%, and 39.6%. Regarding the standard deductions, for a single filer, standard deduction amount is $6,350. Married filing jointly, $12,700. Head of household, $9,350. And married filing separately, $6,350. Now, if you've been paying attention, you will notice that the standard deduction for a single filer and the standard deduction for married filing separately is the same. This is because if you choose to file married filing separately, you're going to be taxed at the same rate as a single filer. So that's something that you might want to keep in mind when you're deciding whether to file married filing jointly or married filing separately. Something else that you may want to keep in mind is the fact that in community property states, even if you file married filing separately, you are required to report 50% of your spouse's income and other marital property deductions expenses on your tax return. In my opinion, that could be more of a hassle than it's worth. Now, of course, if you just have to file married filing separately, then that's different. But usually, filing married filing jointly is the better route to go in opposed to filing married filing separately. Okay, now let's talk about the personal exemption amount. For 2017, the personal exemption amount is $4,050. Now, for those of you who don't know what a personal exemption is, it's the dollar amount that each individual taxpayer is able to deduct off the top for him or herself or a dependent each year. Now, while you can take personal exemption for a spouse, note that spouses can never be claimed as a dependent. I've had individuals ask me a number of times, oh, can I claim my spouse as a dependent? The answer is no. Spouses are never claimed as a dependent in the tax return. So, okay, I've given you the tax brackets for 2017, standard deduction amounts, and the personal exemption amount. So now let's talk about 2018. Now for 2018, tax year 2018, that's the return that will be due April 2019. Now, the tax brackets for starting 2018 are as follows: 10%, 12%, 22%, 24%, 32%, 35%, and 37%. The standard deduction amounts for 2018 are as follows: single filer, $12,000. Married filing jointly, $24,000. Head of household, $18,000. And married filing separately, $12,000. The personal exemption amount for tax year 2018 has been eliminated. There is no longer a personal exemption amount. The increase in standard deductions is sort of like replacing the personal exemption amount, I guess. I don't understand total logic behind the new tax reform, the Tax Cuts and Jobs Act, but for whatever reason, personal exemption amount for tax year 2018 has been eliminated and the standard deduction amounts have been increased. From what I've been reading, the standard deduction amounts have been increased in order to reduce the number of taxpayers who normally would itemize. Now, when you itemize, you would use the Schedule A for itemized deductions. And some of the deductions claimed on the Schedule A would be mortgage interest, property taxes, state and local taxes, charitable deductions, unreimbursed business expenses, tax preparation fees, etc. Now, some of those items that I just mentioned under the Tax Cuts and Jobs Act have been eliminated. And I will likely discuss that in a different video, but in this particular video, I wanted to just provide you with the information regarding the changes relating to the tax brackets, standard deductions, and the personal exemption amount. And as I mentioned earlier, for the income limits relating to the tax brackets, there are various sources that you can use to find out what income limits are for different tax brackets. Note that your marginal tax rate is the rate you'll pay on your highest dollar income, not an overall tax rate. So if you fall under the tax year 2017, if you fall under the 25% tax bracket, it does not mean that all of your income is taxed at 25%, because it's not. Again, the marginal tax rate is the rate that you'll pay on the highest dollar of income, and it's not an overall tax rate. And there are various other sources that can explain better how the marginal tax rates work for you. So that concludes my discussion for this particular video. Keep an eye and an ear out for more videos to come in the next few weeks or months regarding changes implemented by the Tax Cuts and Jobs Act. Thank you so much for listening and watching, and have a great day.